What's going on, everybody? Today we're looking at the 4-hour chart, Euro USD, and we're trying to develop a directional bias. Why do we want to do this? Well, when you target key areas, you have a greater chance of your trade working out. It doesn't mean that it will. That's why backtesting is so important. But when you do things like this, you have a greater chance of succeeding. And how do we know this? Well, when we look at the chart to the left, we can see that prices reacted like this before. And you're just looking for areas, previous structure to be tested. It doesn't matter what type of structure you're picking, as long as you've seen that it's worked in the past, this is what you can use. So you can see that we've got an area marked off here. Price shot down, came right through, came back down into this area, tested it before going up further. Now, you can also see that price continued to go down and then eventually came back up to the area, tested it, and then went down. So when you pick specific areas, this increases your chances of succeeding. So there's a couple different ways that you could do this. So when you're looking at this, like here we go again. There's an area right there that's marked off. Now, we could have had any of these areas that we're watching, but because we've known prices already reacted to these areas, that's why we're using these as an example. But I'm showing you why we're looking for specific areas. Prices come up, tested the area. Now you could wait for the candle to close, or you can take a more aggressive approach and you can try getting in on a trade if you see an entry pattern once it comes into your area. And we talk about this a lot on this channel. Oftentimes when we're marking areas up on the 15-minute and take an entry on the 1 minute, we'll wait for price to come into the area, and if we see signs of exhaustion followed by an engulfing pattern, usually that's a good entry pattern. Sometimes you can wait for it to come back a second time before taking it. There's all different ways that you can do this, but on this example, this is the 4-hour time frame, and this just gives you a larger directional bias, where the 15-minute isn't going to be a big as stretch as the 4 hours. So, and the daily, if you're looking for something even bigger, but simple enough to see. Here we go. Price comes down, comes right back up into this area. And like I said, you could be looking for selling opportunities on a lower time frame once it comes into that area, and then taking as many entries. You'd be targeting the low here, or you could do a more aggressive approach. There's so many different ways that you can do this, but you need to practice this. You can see got several areas marked off here for you. You can see how price broke past the structure, left the area for quite some time. These are 4-hour candles. So days pass, come back up to the area. We don't know which area that it's going to test, but it tested this area, and we waited for the candle to show what it wanted to do. And at that point, we could see that it was giving us the impression that price was going to go down because it wasn't breaking above previous structure. It was just testing it. So you might have been stopped out a few times, but as long as it didn't close above this area, you're still holding on to a bearish bias. And then you just do this over and over again. So if you have any questions about this, let me know. And until next time, bye for now.